Hello and welcome to Earnings Echo. We put together the most important information about Cloudflare.
Today we are dissecting the Q4 2025 results. So let's get straight to the hard facts. Cloudflare reported revenue of $614.5 million.
And that's up 34% year over year, right?
It is a very strong number. On the bottom line, non-GAAP earnings per share came in at $0.28.
That headline growth is solid, but for a high multiple stock like this, guidance is, well, it's the real story. How did their outlook compare to street expectations?
It was a textbook beat and raise. Management raised their fiscal year 2026 revenue guidance to a range of $2.785 to $2.795 billion.
And consensus was where?
Analyst consensus was sitting lower, around $2.74 billion. So they cleared that bar pretty comfortably.
So the market reaction?
Oh, it was immediate and bullish. The stock rallied, I think, between 14% and 16% in after hours.
Right.
Investors are clearly attributing this move to the beat and raise, but also, and this is key, Cloudflare's solidification as a clean, almost unavoidable AI infrastructure play.
Okay, let's dig into the operational drivers then. A 34% top-line growth at this scale implies some serious momentum. Is this just more volume, or are they successfully moving upmarket?
It's definitely driven by significant enterprise momentum. They're large customers, and they define those as spending over $100,000 annually. That group grew 23% year over year.
And what portion of revenue is that now?
That cohort now contributes 73% of total revenue. So the big fish are driving the business.
We've seen other SaaS companies really struggle to close big deals in this macro environment. Is Cloudflare seeing any of that friction at the top end?
On the contrary, they're landing record-breaking deals. They closed the largest annual contract value deal in their entire history.
How large are we talking?
$42.5 million per year. And on top of that, they also signed an $85 million pool of funds contract with a leading AI company.
A pool of funds structure. That's different from a standard subscription. What does that structure imply here?
It implies a true platform bet. Instead of buying just one specific tool, the customer commits a lump sum $85 million over 2 years to use across the entire Cloudflare ecosystem.
So they're not just buying security or storage, they're basically building their business on Cloudflare's rails.
Exactly. It signals very high stickiness.
Do the retention metrics support that view?
They do. Dollar-based net retention actually ticked up to 120%. And operational efficiency is peaking. New annual contract value bookings grew nearly 50% year over year.
50%, that's the fastest rate since 2021.
Yep. And sales productivity hit all-time highs, which tells you their go-to-market retooling is really paying off.
Let's unpack the sentiment on the call. CEO Matthew Prince is, known for his big picture vision. How did management frame the AI opportunity this quarter?
The tone was very specific. Prince described a fundamental replatforming of the internet toward what he called an agentic internet.
An agentic internet.
Yeah. He noted that while a human might visit 5 sites to make a decision, an AI agent might need to scan 5,000.
That's a powerful narrative, but did they provide any hard data to back up that kind of traffic shift?
They did, actually. Management cited that weekly requests generated specifically by AI agents doubled in January alone. This automated traffic is becoming a massive tailwind for their network.
Okay, but this raises the competitive question. Why wouldn't these AI companies just build on the hyperscalers like AWS or Azure?
Well, management highlighted strategic neutrality as the winning factor. You see, AI companies are often hesitant to feed all their data to hyperscalers who are actively building competing models.
So Cloudflare is the neutral ground.
It's the neutral ground. And on top of that, these vibe coding platforms are largely building directly on Cloudflare workers because of the latency advantages you get at the edge.
Growth is great, but we always have to watch the margins. Did this big influx of traffic impact profitability at all?
There was a slight impact, yeah. Gross margin came in at 74.9%, which is just below their long-term target of 75 to 77%.
And that's due to the high traffic mix.
Exactly. But, and this is important, free cash flow remains very strong at $99.4 million. That's a 16% margin.
So synthesizing the long-term investment narrative here, what's the core takeaway? What's the echo?
The echo is that Cloudflare is positioning itself as the global control plane and really the toll operator for these AI agents. Yeah. With 80% of leading AI companies already using their infrastructure, they are becoming the necessary plumbing for this new agentic economy.
And the market is accepting a premium valuation for that position. With a price-to-sales ratio over 20, it's a steep price, but for a very compelling story. And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.